Amazon had a $800 million dark pool print occur after hours today. That's a very substantial print, and because Amazon is one of the largest holdings in the market, 3.11% of the S&P 500 to be exact, this could bring a lot more of a larger move to the market, especially if Amazon starts to fall, which I do believe that it will very soon. And in this video, I'm going to explain why. So SPY has not been able to get away from this large dark pool print we saw all the way back on May 27th. Remember, this one was a $1.4 billion print. This is very, very substantial, and it has been pinned to the price of SPY, or it has been pinning the price of SPY to this level basically since then, even a week later, more than a week later at this point. Literally, we've been up above it. We had this big supply zone up here, and then it fell down off the supply zone, found more demand down here, bounced up, and just back and forth all the way along here. So we have formed what I call a diamond pattern. I've spoken about this before. Basically, we have the four sides of this diamond in the yellow here, and we've traded within this all the way until we actually fell below, we gapped down below. That's the correct term for this, because we gapped down the following day. We actually didn't fall during the day, we gapped down, but we had a lot of strength after that gap down, and it actually baited a ton of bears because they shorted in it, because they saw us get below this trend line right here, which is very, very crucial. This one especially, this yellow line. We gapped down, took a ton of bears in after that gap down, and then rallied straight through back into it. So that wrecked a ton of bears, and it relatively has stayed above since then. We tested the top of it today, and previously yesterday was not able to be able to stay over this, so we fell back down below it again, which here we are right now. We are below this trend line for the second time, and now we actually closed on the daily below this line, which is even more significant because we actually haven't had a daily close below or above this level convincingly, and right now this is pretty convincing below this level. So there's two scenarios that happen. I'll go back to the 15-minute chart. First one here is we actually could get a gap up back into this level, or back above or on this trend line. That'd be about 414 or higher, maybe even 415. Somewhere within that range. That would basically bait a lot of bears yet again from today that may have shorted at the close because they saw us below this level, gap it back up, and they'd have to cover that position, which probably would give us a little bit of a covering rally off of that. Second one that actually happens is we actually have some form of a gap down. It doesn't have to be too much. However, we could gap all the way down to this 408 level, which, yes, that would be substantial, but it could be anywhere between where we closed and all the way between 408, and I would expect a bounce off of this trend line. Now, this trend line is important because it has acted as a support from all the way back here, back when we were in the diamond pattern, all the way to over here when we gapped down. So it's acted as support twice, this line. So if we did actually test this one, whether that be tomorrow or Friday, this would act as a support. Again, could it fall through? Yes, market's all about probabilities. However, this would act as a very strong support, relatively speaking, that could be a nice bounce area. So those are the two scenarios I see playing out. In terms of trading intraday on it, you do have to be careful, especially with CPI data coming out on Friday. Remember, CPI data tends to move the market quite a bit pre-market. It comes out at 8:30 p.m. or a.m. Eastern, so you do want to watch out for that because it will be in the morning before options are even tradable, and we've seen a lot of fake out moves on previous CPI data prints, so you just want to be careful, especially if you rally straight off of it. Could be a potential short setup in the afternoon. Also, I do want to talk about Amazon today because we did have this very big, almost $800 million in premium dark pool print. This is very, very large for Amazon, or any individual ticker for that matter. So we do want to watch this level of 121.18. Now, it does sound funny saying 121 for Amazon after that big split, but this is the price for it right now. And if you remember from our last time we had a very large print on Amazon, I actually made a clip on the Twitter account. It occurred right down here on this level, which I guess is like 103 now, after that split. And I gave a great risk reward setup on it. I said if we did make a new low around this level right here and had a daily close under, then I would cut that position. Otherwise, we could go to the upside. I picked some further dated contracts on it just to give myself more time. However, it did actually rally right off of that in expectation for this split. And those people that bought I think they bought 1.4 billion worth of shares. They profited a ton on this thing because it went up a bunch after that. We've seen some bigger prints up here, which I would assume would be sells. However, right now this is potentially a sell from what they bought or somebody else selling on the way up. because I actually have a bearish emphasis on this right now. So the first thing is we had this kind of like a channel in a sense. We have the bottom right here and the top over here, traded between this until we had the split day right here. You could see the split happened, and we actually rallied above this level. Now what's interesting is it was not able to hold above this channel, which is very, very bearish. If something breaks out to the upside and then falls back into it, retests the level that it broke out previously, and then fails off that retest and falls down again, that's super bearish. Also, the fact that we gapped down the following day under this level, like look at this right here, we closed in between and then the following day we gapped down below. That is super bearish. We haven't had a daily close back above this level yet. So that's 2 days in a row where we haven't had a daily close back above. That's another bearish sign, and something that this thing could actually start to fall back down to where it was before. Now, in terms of risk reward on this, if somebody were to short this, a daily close back into this level, for example, right now it would be like around 125. If we have a daily close back into this level, into this channel, then that would be a cut, which is pretty close to where we are right now, so not too much of a risk. However, the reward is going to be really, really nice. I'd see us potentially filling this gap on the downside, so you could see 115 on this. So 121 to 115 is a nice short on this, with a little bit less of that risk to the upside. So, and this is something that could continue to go down and fall harder afterwards. This would be a really nice trimming spot because of this gap that it made during its run up. But I do like this in terms of a setup right now, and this print is a great indicator for the time being, especially if we stay under this level. Watch the daily closes afterwards. If we have a Thursday close, Friday close under this level, that's pretty bearish, and as long as it stays below it, the bears could be eating very nicely in the future. So that's one thing I did want to talk about. And then another thing is an update on actually QQQ. So I'm going to go over to the QQQ chart. We saw a ton of tech dark pool orders in the past week or so, past 5 trading days specifically. We saw a bunch Friday, Monday, and Tuesday. Literally, we were seeing like $400 million prints on all tech. Like Qualcomm had it, Apple had $400 million plus orders, AMD, Nvidia, Microsoft, all of them. Microsoft's had like billions. It had $3 billion worth in the dark pool just between Friday, Monday, and on Tuesday in a singular prints. So overall, it had $3 billion. That's pretty big, and right now we're actually consolidating for quite a while so far on QQQ, just like the S&P 500. So we do have to be careful about this range. So far, 302.50 would be our bottom end of the range, with the top roughly being this 312.39. So we've traded between here. We had a fake out to the upside. Remember, that is typically a bearish sign if we do have a fake out. However, I wouldn't be surprised to see another one of those fake outs either way after CPI. So remember, CPI tends to have kind of like a big fake out to one side and then falls down after if it was up, or actually gets picked up after if it was down originally. So you do want to be careful before you enter a swing position, especially if it is before CPI. I'm personally not swinging anything before CPI. I want it to come out first, see kind of what happens after that. That's going to give best risk reward. But as of now, I'm not playing anything super long or overnight until one of these levels gets broken on the daily candle. So it can fall down intraday, but if it gets picked back up afterwards, that's not good enough for me. I want confirmation either way. 312.39 and 302.50 is going to be my confirmation. Otherwise, it's just going to trade in between, and I'm just going to scalp it between each day trade it basically, as I've been doing so far. So other than that, though, definitely keep this on watch right here. Keep the VIX on watch as well, because we are below this demand, which is key. That's why I would not be surprised to see another fake out to the upside, is because VIX is getting weaker and weaker so far. I'll go to the daily chart just to give you guys a sense on where we are. But right now, we were in this demand zone for a very, very long time and now fell below. So the more it stays below, the more bearish on the VIX it is. And you remember what that means. If the VIX is bearish, that's going to be more bullish on the S&P 500 especially. So do want to check that out. Last thing here, Apple, in terms of a chart, still below this key channel level right now. It's just consolidating below it, but the more we stay below, the more bearish it is. We haven't had a weekly close back above this level on the blue line. So other than that, still relatively bearish for the time being until said otherwise. And yeah, basically just super mixed flow, at least for the last 2 days because of this consolidation. However, we've seen a lot of those big SPY orders to the downside. IWM has also had some pretty big orders as well. We saw these come in after hours. These are out of the money for the 7:15 expiration, with millions in premium. Nothing crazy today in terms of SPY flow, so that's interesting. And again, same thing with yesterday, but For the most part, we know that flow is overwhelmingly bearish right now with minimal big calls along with it. So until we see a lot of those big calls and a break above the channel that we have right now on the S&P 500 and the NASDAQ, then I'm not going to do anything in either direction. But other than that, I appreciate you guys watching this video today, and I will see you guys next time.